Alright guys, so I'm going to go over using the wave chart and show you guys the turns and all of that. Right? The idea here is to understand how markets turn, to see trading opportunities. That's about it. Alright, so first we already have a trend, okay? Right here you have 116 stocks that go up in 10 minutes. And how many pull back? 42 stocks in 1 minute. So what is going on here? Who's stronger, bulls or bears? If I just give you that information, obviously the bulls are kicking ass. Why? It's more than double the amount of stocks on the up wave, right? And more time. So more price and time, which means what? It has more pulling power and more lasting power. It has it lasts longer and it goes higher, more distance. Right? Then just bullshit correction here, and then again the rally ensues. And what do you have? You have 84 stocks in 5 minutes. Then after that, you have a pullback, only 16 stocks in 1 minute. So who's stronger? Obviously the bulls. Again, 50 stocks in 6 minutes. Over here, it gets dicey. Like there's some selling here, no question about it. 79 stocks in about 7 minutes. But again, when selling happens, you cannot say, okay, selling happens, the trend is going to turn. There could be a lot of reasons for selling. There could be what? There could be selling to take profits. They could be selling in order to buy, meaning take it down, do a spring, and accumulate to go higher. So there's different reasons for selling, right? So that's why you cannot say any single selling wave by itself is selling. The type that is a change of behavior, or what is the other one? Sign of weakness, right? So you need a lot more data. So the only data point you have here is, okay, you have a selling wave, and all it does is just test. So don't even think about shorting, okay? All it does is selling wave 79 on 7 minutes. All it does is test the breakout. All right, then, and from there, what do you expect? Obviously, you expect buying, right? Because breakout, break and test, all that. In trends, that's what happens. Yes, there's higher high, higher low, but another way of seeing it is the up waves are bigger than the down waves. And a third way of seeing it is you have breakouts and tests on the upside. All right, and these are different ways of viewing trend. Break, test, break, test, break, test. All right, so you have 79, and what happens after that? 137 on that test, where 79 stocks went down. 137 picked up. 137 picked up in 20 minutes. Are the bulls still there? Obviously they're there. Why? Because it's a big wave. From that selling wave, the bulls picked up. They bought. Sell to buy. That's what's going on. So sell, do a test, and some people call it mitigation, or who cares? They just sell, tag the level, and there's a lot of shorts that are stuck, and because they're trying to sell for whatever reason, and the buyers come in, and there's also pullback buyers. If you have short covering and you have pullback buyers, that creates the next wave. Here you have 137 stocks up in 20 minutes, and look at the pullback. 32 in 1 minute. Now, if I show you this, let me tell you, people will short. I don't know why, what it is. They may see it's overextended, but you don't, because if you're a Wyckoff style trader, you have the common sense that tells you that the demand is much stronger than supply, and you have facts, figures to back it up. What facts, what figure? Time and price. Time and price, it says 137 stocks in 20 minutes is bigger than 32 stocks going down in 1 minute, right? So demand is stronger than supply. The forecast is higher. Yeah, because demand is stronger than supply. The forecast is higher. Here you have 109 in 12 minutes, 17 in 2 minutes. What is that forecasting? Higher. Here you have 88 and then you have 49. What is the forecast? Higher. Okay, if you have a trend and you have a rally with a pullback, where the rally has more time in price than the pullback within a trend, forecast is higher. Don't even think about shorting. All right, until you get a change and you have confirmations. So that occurs again here. And then what happens is here you have 176 stocks. 176 stocks go down in 10 minutes. If you compare that, it's bigger than 1, 2, 3, 4, 5, 6, 7, 8, 9, ding, 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 many others. That is your warning. That is your warning. Is this selling in order to accumulate to go higher? Is this profit taking? Or is this a sign of weakness? That's the question. If it's the sign of weakness, the buying after this must prove that it's exhausted, meaning there has to be a lack of demand. There has to be a lack of demand, right? So if you look at this, 176 down, and it pulls back 118 up, what is that telling you? Is that exhausted? Is that a lack of demand? No, it's not a lack of demand. So don't even think about shorting. When it went down 176 stocks, when 176 stocks went down in 10 minutes, the damage to the Russell was right here, where it did biggest price wave in 49 waves, biggest volume in 16 waves. So it's very nice confirmation, meaning selling is supported by the stocks going down. 176 stocks are going down, and that's damaging the Russell in terms of taking price lower on big price and big volume. So things make sense. You see, things are making sense. Then what happened? It pulled back, but it's not enough weakness, meaning it's still 118 in 9 minutes. So they're still, maybe it's because of the support level, but probably this is support level. So there's some buyers here. It goes up. What is that telling you? It says this is not lack of demand. Cannot short. You cannot short. All right. There's no lack of demand. Cannot short. The other thing is, in this final up wave, you get clues. You see this this high volume at the high? That's climactic. That volume here, which is the biggest up wave in about 58 bricks, look what happened after it. Downtown, right? It goes down. So if you have the biggest volume in 58 bricks and it barely goes higher and there's huge selling afterwards, it gives you a clue saying that this is climactic. What does that mean? That means they're selling on the way up and now selling on the way down. What is that? Distribution. That's distribution. Selling at the best prices, which means higher up, and then not holding, instead reversing and going down, meaning selling started from here and then ensued here. All right, so then about 118 stocks went up in 9 minutes, and after that 83 stocks went down. But this right here is the game over, where when you see that right here the 49 stocks go up in 7 minutes, it's done. This is the lack of demand. Now you're probably asking, well, how the heck do you know? Like, oh, this is, You don't know. Yeah, I do know, because the numbers print. 49 is less than 118, less than 121, less than 88, less than 109, less than 137, less than 50, less than 84. It's up to that. So it's less than 1, 2, 3, 4, 5, 6, 7 up waves. That's the smallest price, smallest, price, whatever, price distance. A smallest stock increase, meaning only 49 stocks went up in the past 7 waves. That is your lack of demand. And once it goes down, then you have 2 things supporting the turn. 1, heavy selling. 2, weak buying. Bingo. What else do you see in the Russell? You see a breakout. Where do you see a breakout? Right there on the 4. It's not very visible in terms of volume, but if you see the wick, why do you think the wick is big? Because what it tried to do here is hold support, but it couldn't hold support. It tried. That's what created the wick and failed, and that's what created the follow through to the downside, breaking the support, making this the breakdown, making this the test of the breakdown. And then finally, what you call this is, what do you call this? This is your lack of demand, and price goes down. And that's it. So this is a very simple approach. If you study Wyckoff's material, you'll find a study that explains just like this. And what you're doing here is learning to read supply and demand using price and time. Then you can add volume like the way I'm doing here in the tape reading chart by looking for this high volume here, telling me what? Market is screwed. Climactic volume and your sign of weakness, and then some more pressure that came right here, the increase of volume. Right? All right, folks, go look at the wave chart in the Wyckoff course, and that's what's going to teach you how to do this. All right, take care. Bye.